Morning, everybody. How are we all doing? Morning, Pip, Martin, Steve, Stevie, Jerry, Christian, Virginia, Burke, Amy. Morning, Kennelly. How are we doing? Sorry, I'm still sweating from my gym class. The weirdest thing happened to me today on the way to the gym. Right, water fell out of the sky. Can you believe it? Water fell out of the sky. Really weird. Morning, Sega. Morning, Monkey. Haven't seen it for about 6 weeks in the UK. Water. Stop now, and it's all dry again, but weird. Really weird. Anyway, that was a shock this morning. So, I'll just quickly, I haven't had a chance to look at anything this morning, so we'll have a look at everything. DAX basically has opened, that's the wrong button. DAX has opened pretty much where it was, so no gap or anything today. We've got first gap fill done. So Monday we looked at that double bottom and playing it up into the gap, and then looking at these gap targets for this week. So we are well on our way. First one's done, pulling back, looking for continuation flag break upwards today. So we'll see where we go at the open. News wise today, CPI for the Australian dollar. It's Thursday. Oh yeah, sorry, yeah. I was going to say that was what I was saying. Well, why is that? That's because I was talking heads, wasn't it? The CPI for the Australian dollar obviously happened yesterday. At some point today, we've got the German CPI figures. The German CPI figures, because there's multiple states within Germany, they all release their CPI figures at different times because it's segregated. So we don't get the actual figure released at a specific time. German CPI is deemed to be the main inflation figure for Europe because it is the largest part. So that will come out at some point, will suddenly appear, and it may well have a big impact on the euro. So the euro could move really at any point this morning. It quite often comes out fairly early. So bear that in mind if you trade in the DAX this morning. We might see some volatility off of that. We've got the Spanish CPI coming out at the market open, which is obviously in 5 minutes, but that's a little bit less impactive. Main news today is unemployment claims for the US dollar. GDP comes out at the same time, but the unemployment claims is the main thing because that will give us a clue as to what the unemployment rate will likely be, and that is the driver for inflation and interest rates, rather for interest rates, not inflation. So that's 1:30 this afternoon, an hour before market open. And then after that, there's no news. There's pending home sales, but that doesn't really matter. So that is news today. Let's have a quick look at overnight and see what the Japanese have been saying about the FX markets. 9:30 last night. Japanese large-scale retail, Bank of China, Australian retail sales came out as a positive, which is good. A bit of a rally off of the retail sales figures for the Australian dollar. Consumer confidence. Powell speaking this morning. Majority of the FOMC sees 2 more rate hikes by year end. That's exactly what we've said before. Okay, so there's nothing from the Bank of Japan overnight. They've gone quiet. Interesting. Okay, so see if what Powell said has moved the US. Not a lot, a little bit of a whipsaw. So looking at these yen pairs, excuse me, again to yesterday, another bull day for the US dollar yen. So we've had basically one pause day out of the last 5 or 6. The rest are bull days. Today, we are so far bullish again. So they are pushing this yen. Whether it be through choice or because just there's a bit of strength coming in the US dollar, doesn't matter. But this US dollar yen is really getting pushed. New Zealand dollar yen came down hard yesterday. Pound yen came down hard yesterday. Euro yen came down yesterday. Wouldn't say hard. Same with the Swiss. CAD had a little bit of a down day. Aussie had a down day as well. So we are seeing some strength starting to come through. But as you can see from the US dollar, it's not as strong as the US. So the yen strength that we've had and that we've seen coming through hasn't trumped the US dollar. So still weakness in the yen compared to the dollar, which is the one that they're worried about. So we'll see how far we go. We are very, very close to that 145 level, which is where they previously dumped it from, which is basically there. So we are 30 pips, a quarter of an ADR away from that 145 big round number. So if we can push up to 145 today, we may get a decent reaction off of that. So we'll see what happens. Still having a little bit of a squeeze on the US dollar yen. The rest of them seem to be all right, though. We are starting to push down. A little bit of a bull move today, but if that is the peak formation high, that reversal alert, that impact and reversal there, yeah, continuation to the downside. Right, market is about to open in 2 minutes. Oil yesterday. If anybody got into that oil trade with me yesterday, if you were in the live room yesterday afternoon, I said to buy the high of that candle, which was the news oil inventories. And if that high of that candle goes, stop under the low. We're looking for a bull run off of this quadruple bottom. Yeah. Yeah. So if you got into that yesterday, well done. We are in nice profit on that. It basically went immediately. So straight in. Entered at ADR. So we got an ADR hit on oil yesterday. So looking for breaking yesterday's high and the previous day's high. If we can break the previous day's high, we're out of that previous support, turn resistance. And then we've got a leg up into 150 ADR up at 72.50 a barrel. That is where I would probably look at taking profit. But as we said yesterday, be aware of this descending channel. The trendline traders will be trying to sell ADR today if we get to ADR. So oil looking good, straight off into a winner. If you want to protect this with a break even, up to you. To me, it's a little bit early to break even that. I would want to see it up above here. When it gets up above there, I'll break even that and just completely protect it just in case. But we might pull down back into propulsion today and rally. Remember, market, if it does market structure, it does this. If you move to break even too soon, all you're going to do is get stopped out before you actually get the trade. So don't get too eager. Right, let's have a quick look at the DAX. See what we're doing today. Morning, everybody else. Stefan, Philip, JC, Evans. We'll have a whiz through all the pairs this morning. Look at the ADRs, look at the RSIs. Just wait for the market to open. 5 seconds. Bit of a tight 5-minute pre today, but we are on. That's really weird. These stop losses get placed before the pending orders. How that happens. So pre-market 15 is a decent range today. And it's closed nicely inside the range. So pending orders on the pre-market 15. No, sorry, that's a pre-market 10. Doesn't matter. Pre-market 15 is pretty much the same thing. Long. Hello, buy stop. God, how long did that take to execute? Okay, so long on the DAX. Watch yesterday's high for upside initially, assuming that we obviously don't whipsaw the open. So downside targets today, if they do decide to run down today, it's very difficult. You've got this high from the gap up, basically, from the previous day. So that did act as the close. And we tested that when we opened yesterday and rallied away. So this is actually a pretty good level that market has respected. So if we do get down there, I'd look for some limit order buys down there because that is yesterday's low. So they will buy up yesterday's low. And obviously yesterday's high is there. So as you can see, it was a fairly tight little range yesterday. We had, what, 91 pip range. ADR on this is 151. So it's just over half an ADR is all we managed to do yesterday. So a bit of a contraction day compared to the previous day where we had a big nice swing. So yeah, down there would be a good looking buy opportunity. And if we get up to those highs, you want to watch for sells. But we've got those gap fills to the upside to aim for. At the moment, the market really doesn't seem to want to go anywhere, though, does it? A little bit lackluster first 5 minutes. Morning, Baggy. Quite wide spreads today as well. Look. I don't know if you can see, you can't probably see these grey lines, but the spread is, that's the spread, which tells me there's no volume in the market. If they're having to spread the market to fill orders, it means there's very low volume today. So we may be hanging around waiting for this German CPI to come out. So there's your Spanish 1.9 positive. So inflation has gone up in Spain. That's the year on year. Look at the differences, yeah. 3.2% forecasting 1.7 and getting 1.9. And then look at the CPI figures for the rest of the world. We don't have variances like 1.5% difference on inflation. Nuts. But that's target basically. So Spain is at target year on year, which is good. Germany won't be. Variance wise, that is. That's not come out yet anyway. Okay, so DAX is pulling back down to the lows. Really weak open. Okay. That's not really going anywhere, is it? So I think we'll come back to that in a minute. So there's your 5 minute opening range. At the moment, we've still got 30 seconds or so, but not a bad opening range today. But we are closing down near the lows. So I would just wait. The 5 minute ORB doesn't look like you're going to get a huge run off of this, does it? So we'll see where that goes. Right, let's have a look at FX. That's not going to bother to do anything today. 3 seconds. So there's your 5 minute opening range. Just want to see if it goes short as well. So we'll be hedged on that. Yeah, hedged short. Guys, really got low liquidity today. See these candles, when you're getting these candle movements where it stops and then you just get these like bang, 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 bang. Just means there's no volume. What we're used to seeing is the market doing that at the open. Yeah. So if you look at a tick chart, it'd be going like that. At the moment, the tick chart's going like that. There's just no volume. No one's buying or selling anything. So it's going to be a bit whippy. So if you've got a stop, which is fairly wide on the opening range, you'll be hedged. So it just doesn't matter which way it goes. Opportunity to make money today, but need to wait for it to decide. Right, let's have a look at the ADRs. So there's no ADRs today. We had loads of ADRs yesterday. It was absolutely manic yesterday with ADRs all over the place. So we'll whiz through most of the pairs today. But there's nothing today. Asia's been fairly quiet, as you can see. We've had a little bit of a rally off the Australian dollar overnight. The euro come down against the Australian dollar. Everything else is fairly quiet. New Zealand dollar's had a little bit of a drop. a pop with the Aussie, but there's nothing particularly exciting happened overnight, so been quite a tight range. We looked at the weekly ranges on Wednesday. These weekly range plays that we had. So the euro odd was a weekly high. Where are we? It's Wednesday. It's Thursday today, isn't it? Yeah. Monday, Tuesday, Wednesday. Yeah. So yesterday we had the euro odd that hit there basically, and then we came up. We put in that Batman. Yeah. That was. We were looking for the right-hand cowl, basically, which we got. So that's the high. We are stuck there, though. So that's working out, but not gone anywhere as yet. Euro Swiss, same thing. So got out of the long from the RSI extension there. Double topped, straight off the double top, pulling back into propulsion, potentially for a drop there. Euro pound. So that came off nicely. Hasn't hit TP on that. My TP basically is there off of the M5 reversal alert, which was on the H1 RSI extension, and the Euro New Zealand in short on that one as well. So we've just had the retest arrow on that. So there's your M pattern reversal. We have made a new low, so we need that high to hold. New lower high, push down into propulsion. Again, target just above that high, which is ADR. So those are your weeklies. They're all starting to play out, starting to roll over. RSIs have gone fairly flat as well. Aussie dollar, US dollar. So that is an H1, an H4 RSI extension all the way down there. So there's your 4-hour RSI extension down at the 20 level, nicely extended. So basically this is a big, strong move, accumulation, big, strong move, accumulation, big, strong move, accumulation. If you believe in the 3 push scenario, you're going to be pushing back up again, profit take move. So that looks good for a long opportunity on the Aussie US. It's going to need the US dollar to weaken. If the yen does have any strength coming through, if the yen does intervene in any way, the US dollar will weaken off the back of that. So you will get that rally off of the Aussie US. But this Australian dollar is very weak at the minute. So news overnight, obviously, with these CPI figures coming out as negative, will weaken, not overnight, last night, but that will weaken the Aussie dollar further because the pressure is taken off of interest rates. And the trouble with the Aussie is they haven't put up their interest rates as much as everybody else has. They've had more pauses than anybody, which is why they're sitting on 4.1% and everybody else is sitting higher apart from the euro. So if they pause these again, with that inflation figure now at 7%, which is still massively high, it's not going to be good for the Australian dollar. And I think the market will react negatively to that. So it is a long opportunity where you are now. I've got a long on it from yesterday on the H1 RSI extension. So we had H1 RSI there. Reversal alert was there on M5. Took that. We've had an hourly reversal alert this morning. Look. And we are just kind of trying to get a rally started. So I haven't put a target on this one yet. So that's half an ADR. So you've got half an ADR basically up to there. But I mean, that would be really ultimate target on this one, back up into these propulsion gaps here. But it's really going to be dependent on a weak US dollar. So we'll see what happens today. News for the US dollar we've got coming out this afternoon for the unemployment claims. So this is the last news this week for the US dollar, the last major news. So if we get unemployment claims going up, that is going to be negative US, which means we might get a bit of a rally on that Aussie US today. So we'll see what happens with the news. But got a long on that. That's an extension on the hourly RSI. The euro odd is also extended on the 4-hour. So as you can see, absolutely parabolic for the entire week. Last week, we've hit, I think this was the weekly range, wasn't it? Yeah, euro odd. That was the weekly range hit. So it's extended on the 4-hour up there. We got divergence on the 4-hour as well. No, we haven't actually. Sorry. Get that. It's not divergence. But it's nicely extended. We are up at a double top as well. So we've got this previous double top. We slammed into that yesterday, came straight back out of it. They've come back up. They've double topped again. So you got that double top. We hit that double top and rejected it. If you drop down to the hourly, you'll see that we've just basically rejected that high again yesterday and this morning. They haven't managed to rally through it. So beautiful multi-day M pattern. There is your retest on the initial reversal alert. So a break below that low today will see us flush down to at least there. TP just above it, 125 ADR. So Euro odd extended. So that was extended on the hourly yesterday, which is why I got that entry there on the M5 reversal alert, which you won't see now, I don't think. So the M5 reversal alert was there. So that's Euro odd. We've got US dollar yen extended on the 4 hour. So this, I mean, obviously we know with the yen, it's been dramatically weak. This is parabolic, has been for 2 weeks straight up, 2 weeks straight up. So we are looking for a pullback now. If you look at the last 2-week rally, the further away we get from that moving average, the more likely a profit take move is to start. Again, it's the same thing. We've got a 2-week rally, nicely extended. We're just looking for a profit take. If this is going to continue to do that, that's fine. We're just looking for some kind of profit take move before that happens. So you can see where I've got my TP at the moment on this US dollar yen. We've got that high there. Okay, so that propulsion move through that double top. We then came back down and retested it. They added to the longs. We tried again. They added back into the longs. So somewhere here, I would expect, if we are going to rally, obviously, that's what we should do. So we'll see. But TP's on that, on the hourly, are above this double top and that propulsion gap, which got tested. So that's where I'm looking for. 2 positions on, looking to get out down there. Obviously, if there is yen intervention, it doesn't make any difference. Yen intervention is going to drive it all the way back down to there in like 10 minutes anyway. So we'll see what happens. But yeah, all these yens are very, very, very long. Why is 145 level important? So basically this is where the previous intervention started. So as we were rallying last year, basically before the intervention in October, as we were rallying here, this is where we started to get noise from Japan saying, if you do not stop driving our currency into the floor, we will intervene. Not in those, they never say that. They never say it, and they always deny they ever do it. But that's what they say. We are closely watching the FX markets. We will intervene if the FX markets, blah, 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 blah. That's where they started watching it. So we basically rallied up into that high there. Yeah. This is where they got more aggressive. Let's see if I can zoom in on it so you can see it. Yeah. So this is where they got aggressive, all right? And the market went, all right, fine. We tried it again. The market rallied back off of it. They tried to break that 145 again. The Japanese intervened. That massive candle, that 3, 4, 500 ADR candle. I can't remember what it is. It's 500. I should really know, shouldn't I? Yeah, 540 off of a 117. So it's 500 ADR, 500% of ADR. Yeah, that was the first intervention, 145. We were then warned that if it got beyond there again, they would intervene again. So the market came up, tested it for an entire week. They rallied off of that. And then suddenly it broke. And from there, for that entire 2-week period, the warning shots started again on financial juice virtually every day. We are closely monitoring the FX markets. Any FX moves above 145 are undesirable. They called the level 145. Then they said, we will call the line at 150. We hit 150. Bang. That was the big intervention. That was a massive move. And that shocked the market. There was no warning. It all went quiet. Then they put in a 6/7 ADR move in literally 1 hour. But it all started at 145. that's the point where it becomes difficult for Japan financially to export to the US. If they stop exporting to the US, their economy stops. So that's the level we're approaching right now, 145. That's the only reason I'm casting any kind of significance to it, is this is where it all started to go wrong. We've gone quiet this morning as well, after them saying for days and days and days, we're not happy about this situation. We're closely monitoring it. We will take steps, blah, 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 blah. They went quiet last night. We're 30 pips away, quarter of an ADR away from hitting 145. May not happen, but all you can ever do with trading is the only thing you've got to go on is the past with everything, which is why I say in the course all the time, whenever you're doing anything in trading, look left, because look left gives you clues. Because you can see what happened in the past is all we've got to go on. If the support levels or resistance levels in the past that price has reacted at, we have no other clues apart from that. We know that the banks have used those levels in the past, so we have to watch them. Whether they're right or wrong, you can't tell. But that is what happened last time. And then the next level above that is 150. So this zone, if you like, there, from there to there, is where the Bank of Japan will be in absolute pain. And you have to give yourself an injection at some point to get rid of the pain. So we're approaching the pain point. But before that, you saw what happened last time. As we approached that level, the market reacted and profit took. It came up and retested, rejected it. Whether that was the market or the Japanese, it's impossible to tell. We had a big pullback from that level twice, and then it sat and accumulated around it before it finally broke. So if that happens, I'm out, because there is a chance, obviously, of it rallying much further. Don't forget, there's always two players. Every FX pair consists of two players, the US dollar and the Japanese, the US and the Japanese. Everyone has got their own agenda. Everybody wants their own thing to happen to their currency. Obviously, you want your currency value to increase because it makes everybody in your country becomes richer. That's everybody's goal. So although the US dollar obviously have good trade relations, etc., Japan isn't the only place in the world that they're dealing with. So there are other things at play. If the US dollar needs to rally to help the Fed get out of its current debt crisis, who's more important, Japan or the US? The US. The US will rally, and then the Japanese will fight back. It's kind of like, look at it like a war of currency. That's basically, you've got two parties at play, and news events will obviously impact these as well. Tomorrow, we've got the Japanese CPI figures coming out. It's marked as an orange because it doesn't really change very much. Their inflation doesn't change, their interest rates don't change. But it is a news event, and the market will use news events to drive it itself. So when you get to key levels, you just have to pay attention to these things. But like anything, there's no guarantees of anything happening. It's just a level that we've looked at, that we know exists and has happened and had things moving from in the past. Massive wicks to the downside, rejecting these lows. So it does look like it at the moment fancy's going long, but I think we're waiting for the CPI to come out for Germany this morning. So I think we'll be sitting here waiting until we get that news. So dull this morning. Evans, my broker has Germany 40.F, not cash. What's the difference? There isn't really. One of them will be your pricing will be different, probably. So Germany 40.F is probably the futures price. So my price is 159.58 at the moment. Your price, I haven't got futures market up anywhere. Your price will probably be different because you'll probably be seeing the price in the futures market. They track the same. So when the futures market goes like that, the CFD market, cash market goes like that. So you'll probably just find that it's a price difference, but the actual movement will be the same. So it doesn't matter. It's the DAX. It's all the DAX. So we're rallying long. Hedged at the moment. So guaranteed to lose $600. And then we'll see what happens after the move. Right. So that's the US dollar yen. The only other ADR we've got is the US dollar CAD. ADR RSI we've got is the US dollar CAD, which is an hourly RSI extension above the 70. The entry for me yesterday was there. So the US dollar CAD's a bit of a difficult one at the minute. I reset the EAs yesterday, adjusted all the figures down, and just changed everything really so that I was removing the TPs, and I've reduced the risk so that I can show better in here. Draw down, and I still want to show what's going on with every trade with the H1M5 strategy. I just want to make sure that the risk is more realistic as to what you would achieve. So so I adjusted the EAs yesterday, so it's gone short as well on that H1 M5 mean reversion. However, I am still long on it, so scaled out of those longs, those aggressive drawdown control positions long. My average for the longs is 125 ADR, so that's within reach to get out of. Overall, I think US dollar CAD I'm probably in profit on at the moment. So yeah, I'll deal with the short later. So if it pushes up, obviously we'll just scale into the short and wait for the whatever the US dollar CAD is going to do, really, which is virtually impossible to tell at the moment. So that is extended to the upside, so it's a nice looking short opportunity if you're not long on that one. So we are pushing up into this area here, which is this propulsion gap. So they had this kind of very wide accumulation for about 3 or 4 days, and then we suddenly started that run on the news. I think that was FOMC. And then we just basically went into another multi-day accumulation. Price discovery to the downside failed. We tried again, failed. Now we're doing price discovery back to the upside. So if you guys, any of you are familiar with Wickoff, that is your Wickoff spring. Can't remember what they call that bit, but it's the accumulation at the high before the break. So yeah, it looks like a long at the moment, technically. But fundamentally, we will have to wait and see what happens this afternoon with the unemployment claims, because if that unemployment claims number goes up, means that the unemployment rate will go up, which will be negative US. So this could all come crashing down. Also, don't forget, if the oil trade that we started yesterday works, that's going to be bullish CAD. Yeah, so US dollar CAD, obviously, if we get a bearish US on the news this afternoon and we get a bullish CAD off of oil pricing, that US dollar CAD is going to come down. So we need to see if we can break this previous day's high. So if we get through there, basically on oil today, we've easily got to run up to ADR, and that's where the trend line players are going to start shorting it. So we're going to make some resistance up in these propulsion gaps. So I'm going to watch what the TP is there. It's not much. It's only about 2R, I think, there, which isn't particularly exciting. Yeah, about 2.5 R at ADR today. So it's not a bad trade. Straight in, straight out in 2 days, maybe 3. But we'll see. Right, so yesterday got out of a few bits and pieces. So there was some like US dollar CAD. I thought there was other stuff that I got out of yesterday. Oh yeah. So Aussie dollar, New Zealand dollar. After all that pain we went through for weeks with the Aussie New Zealand, RSI extension on the hourly, M5 reversal alert, straight in, straight out. Look at that for an exit. I said about this one yesterday. That when you talk about laser targeted entries and exits, that doesn't get any better, does it? That's about the best exit I think I've ever seen. So straight out of that one, which is absolutely perfect. And that was basically 72 pips, which is an ADR. So it literally 1 ADR to the pip. Perfect. So got out of Aussie New Zealand longs. What else did I get out of yesterday? 3.5% yesterday. So there was a few bits and bobs. I think it was mainly US dollar CAD. It was. Scaled out of a bit of a pound. It's so range. You can see as I'm flicking through these charts, we are just so range bound. It's so hard at the moment. Everything is just sitting around waiting, and nothing's going anywhere. So pound New Zealand, that was an ADR reversal yesterday. So H1M5 entry, straight in, straight out. That was the target. Bottom of that propulsion gap. Beautiful little trade there on ADR reversal. So that was 255 off of a 175. So what's that? 50, about 150-ish, something like that. 150, 175 ADR. Big ADR. Nice big 3-bar reversal. Perfect 3-bar reversal pattern there for those who are not familiar with 3-bar reversals. Bull candle, pause candle, spinning top, doji or shooting star, followed by bear candle, push, pause, pull. Absolutely one of them, probably the most, in my experience, the most reliable 3-bar reversal pattern you'll ever find. They appear everywhere. So yeah, that was lovely. So straight in, straight out. Pound US. That was it. Yeah. So most of the profit yesterday was made on this US dollar CAD, getting out of these two positions. So that one there, and then that one which I added on the high yesterday. So break of yesterday's high. We pushed up, broke and held the high. So I put a pending order above the high with aggressive to get out in that propulsion gap, which I did. So that propulsion gap fill was the target. Done. Still in that long, obviously. That was it yesterday, so nothing else. Anybody got any pairs they want to look at specifically? This market this morning is not really moving anywhere. We are hanging around this morning until we get that CPI. So there's no point in watching the DAX because the DAX isn't really doing anything today at the moment. It will go at some point, but not at the moment. And everything else is quiet. There's no ADRs. So if there's any pairs you want to look at, let me know. And we'll have a look at those. Jason wants to look at gold. Well done. There it is. That's gold. Sorry, standing joke if you're new in here. That's silver. Gold. So obviously gold's just a US dollar cross. At the moment, it's coming down because we've got a bullish US dollar. So whatever happens to the US dollar, the opposite will happen to gold. So at the moment, we're rejecting this low. Beautiful bottom rejection at the moment. Look at that on the hourly. So that's yesterday's low, dotted line. So this morning in Asia, we tapped into it, rejected. We've had another run up, rejected. We're having a run up now, rejected. So buy it. Propulsion gap target to the upside at ADR. So buy it. So this afternoon, this is going to move this afternoon, gold. So 1:30 this afternoon. Yes, 1:30 this afternoon is when gold is going to move. You're going to get your unemployment figures and your GDP. So if the GDP and the unemployment figures are negatives, i.e. if GDP has come down and unemployment rates have gone up, gold will fly. If it's the inverse, gold will drop. So if it's going up, because we're in a downtrend, you want to look for targets up there in ADR. I'm not quite sure exactly why we're seeing this US dollar strength at the moment. I think it's just an undoing of what we've had. We've had a weak US dollar. So we're getting a bit of a strong US dollar at the minute. It's just, moving in cycles. So at the moment, though, I trade RSI extensions, mean reversion. So the last entry on this one was there. Had any entries on this? I don't trade gold, but it is just the same as any other US dollar cross. So if you're trading gold, you're trading the US dollar, basically. What's take on pound yen? So gold, I think you might have had actually a reverse alert on that this morning. Yeah, you just had the reversal alert there, look. So as soon as we break back above that level, yeah, with a bull candle, you'll get your reversal retest arrow. And that will be your W pattern reversal. And then obviously trade it up into that H1 propulsion gap. So target 1 in there, target 2, ADR basically. But if the news comes out really bad for the US, obviously you could easily extend beyond that. Obviously, if it comes out really good for the US, you're falling out of bed, basically. I mean, if the US news comes out as massively positive, you've got an accumulation there. Other than that, you're coming down to there. So it's just basically look out below. If you get really weak, really strong US dollar figures, if GDP goes up dramatically, and the unemployment figures drop, or the unemployment claims drop dramatically, yeah, could go absolutely anywhere. Pound yen. So we have started the move to the downside on the pound yen. So there's your M pattern, there's your retest arrow on your M pattern reversal. We have broken through that level. We have tapped into the previous day's low yesterday and rallied off a bit. So at the moment, this is a pullback. So high. So there's your high, low, lower high, lower low. Looking for that lower high to go in now for market structure to remain short. So this area here, which is the previous resistance, turn support, turn resistance, is where I would look today for shorting. Already got shorts on this, obviously, as we know, because we've been stuck in this. Any yens you've been in for ages, depending on obviously when you started. But the initial entry signal, or a market condition for an entry signal, was there, and we were looking basically for a pullback. But it's rallied like nuts, and this is why the Japanese are intervening now, because these moves are too fast and too sharp for the Japanese to withstand. So we have had a new break to the highs. So as soon as we get that low broken, market structure is shifted back to the downside. So we've got these propulsion gap targets down here. So the buy cycle, accumulation, sell cycle. But we need to get it started. And at the moment, every time we start, every time it looks like we're starting a sell cycle, it fails. Yeah, so we start to push, fail, start to push, fail, start to push. One of them is going to hold, and it's going to drop like a tank. Yeah, so waiting, but yeah, just don't. If you're going to long the yen, rather long anything against the yen, just be aware that there is talk of intervention, and if that happens and you are long this thing, you are not going to get your stops honored, and if you're position trading, you are not going to get out of it for weeks potentially. So last drop we had after intervention in October last year on the yen lasted 3 months. You don't want to be trying to battle your way out of a position long for 3 months. Not going to happen. But we don't know if it's going to happen. We don't know. Yeah. Don't forget, if you want to intervene, so if the Japanese are going to buy a ton of their currency to make their currency stronger, they have to buy it. They have to have the funds available there. There has to be enough willing participants to sell it to them for a start. So, it's not an easy thing to do. Which is why they try to avoid it at all costs. So they would much rather the market participants basically just gave them a break, which is what they normally do. Yeah, after a rally, you get profit take. Yeah, and we're on a big rally. We've had no profit take. So this entire move We had a flag. That's it. We haven't had a profit take move yet. And look at this. I mean, this has just been nasty, grindy. Horrible thing. So it will come down very, very fast and hard. It always does. But we're just waiting. They're all. We got some yen strength coming through this morning. Look, all the yens powering up. So we are starting to see a bit of strength come through across the board this morning. US dollar yen also. Yen strength coming through. So we'll see if this holds. This is just normal market movement. So probably the DAX is moving now. Straight down. Nasty, whippy thing today. Again, this is what we were talking about yesterday afternoon, the opening range breakout EA and strategy. And this new version that I'm running tests with at the moment, using ADR and using these wider stops. As you can see, if you're using a normal stop, which is opposite end of range, and if you're using the continuous mode to re-enter, days like this where you just get whipsaw, you have a stop out, enter short, stop out, enter long, stop out, enter short. Yeah. So you've stopped out once, twice, 3, 4 times now. So your 4 are negative and you're short. Yeah. Widening the stop or making sure that the range conditions are right for trading just means that you, at the moment, I've lost nothing. I'm guaranteed to lose 1R today because I'm hedged. So one of these trades is going to fail. So I'm locked in at $600. I'm going to lose $600 regardless of what this market does today. If it just does that for the entire day at 2:30, I'm closing it out and I'm going to lose $600. However, if we get a rally today, that stops out, that goes into profit. Yeah. And if it hits the TP at 2R here, win. So it's just nice using these wider stops. It's a much nicer, less stressful way to trade. So much less stressful using a quarter of an ADR as a stop loss instead, or 150% of the opening range, maybe 180% of the opening range. You have to do some tests on the existing ORBEA, but it's so much more relaxing. I got my prop account running in virtually the same trade. And it's just so relaxing, not having the pain of, oh my God, I'm getting chopped to pieces at the open. And that's the thing that's been driving me up the wall with the opening range breakout. Yeah, and I think a lot of people, the days where it just goes, you're like, oh, that's amazing. Just made 3.5%. The days where it doesn't go, for me personally, I'm not geared up psychologically for being stopped out 5 times in the morning. I don't think many people are, which is why most people fail in trading, and scalping is the hardest job on the planet. This is kind of a little hybrid in between, which still has the same return on drawdown and the same return overall, except it's just so much more stress-free. And if this thing now stops me out, yeah, and takes that liquidity and runs back and stops me out there, that's a 2R loss. But it's going to take an hour or so. And I don't mind taking 2R in an hour or two. I just don't want to take 4R in the first 30 minutes, which is what can happen, can't it? So, nice. I like it. It's stress-free. Well, it's not stress-free. It's just less stressful. What's your shorting entry on pound yen? 182.58 is my average. So stopped out on the long on the DAX, and DAX is short. So yeah, so our average is 182.58. But there's 5 positions on that. So initial entry was there on this RSI extension. Actually, is that the initial entry? Yeah. So that's the initial entry there. And as you can see, we got in on the RSI extension after the break of that level, looking for the pullback, the profit take move to start. And obviously that's where it went. So first entry, second entry, third entry, fourth entry, fifth entry, plus an aggressive drawdown control position up here. And that's an aggressive drawdown control position as well. Yeah, so that one didn't get stopped out. Second one taken yesterday on that push. And then we've come down. So it's in profit at the moment. The reason you'll see that I've got TPs set here. The reason for that is obviously because of this double bottom, which is previous week's low. No, last week's low, sorry. Where are we? Thursday. Yeah, last week's low. So if that is going to hold as a range now, up here, and then obviously it could go into a second leg up, could go into a leg down, we don't know. But if that is going to be where we are going to form a range, I want to be out before that range forms. I've got TPs scattered all the way down here. As you can see, I've got a TP down there. The reason that is down there is because if the Japanese intervene, we are going to hit that. So if we are going to get Japanese intervention, I'm going to let them make me a lot of money. If we're not going to get the Japanese intervention, when we get down to here, the whole lot will be taken off manually. So if, for example, we did a 125 ADR today, I would close the lot out and be done with it. I'm not going to hold for an intervention because the intervention may not come. Yeah, just because they're talking about it doesn't mean they're going to do it. So, and the way this thing's rallying, obviously, you don't want to get too aggressive on it. So stops are in place on. Got one on that one. I put one on that one. Yeah, so stops in place. Should have been in place on that. Oh, that's why I didn't do it. So I've stopped with aggressive drawdown control positions. I've stopped putting stops in place if I take them late on in the day. So if I take an aggressive drawdown control position sort of in the New York session, anytime after I come off the New York's live rooms, I'm not putting stops in overnight because the spreads at the swap are getting ridiculous at the moment. There's so light liquidity in the market. It's not just Robo Forex. I keep moaning about Robo Forex spreading me. It isn't just Robo Forex. So many other brokers are doing it. Most brokers are doing it. And it is because there is light liquidity in the New Zealand session. When the banks in New Zealand open, there's just not the liquidity there at the minute. So we are getting these ridiculously high swaps, like half an ADR spreads. So I'm not putting those stop losses in place. And then the next day, put the stop losses in place or close the aggressive positions, depending on, if it's moved up. But I'm making sure that the aggressive positions are no more than 1% on half an ADR. So, it's unlikely you've had an ADR push against you in Asia. It does happen, but I mean, nothing you can do about it. But I'd much rather be taking a 1.5% loss on an aggressive drawdown control position than, for example, placing that trade, putting a stop there, getting stopped out with the market going nowhere near it, and then it being down there the following day. That would annoy me more than losing that extra 0.5%. So I'm putting the stops in after. Otherwise, you're just going to find yourself in massive trouble with spreads. So, right, so there's pound yen. DAX has come off of the lows. This might be Mr. Whippy today. So that is the previous day's high we've just rejected. So remember I said this morning, targets to the downside will be yesterday's high, that level where we tapped into, retested and off. That's where the limit orders will be placed. That's where the limit orders seem to have triggered. So the question is now, that sell move that they've started, are there enough sellers to drive that back down and retest that level and drop? Or are we just going to let the limits drive us back up into yesterday's high? Either way, not looking particularly fun today. So stopped out on the longs and short. So hopefully those sellers can take control and we get a new leg down. See, nasty open today. We still haven't had the figures yet either for Germany. So they'll come in at some point, but we're not going to get a lot until then, I don't think. So it's too early to say what might happen in 2H on ECB rates. Do you mean 2 hours? What's 2H? That is. The Swedish Krona's just had some fun, look. Right, that's all I've got for you this morning. There's not a lot to look at, really, is there? Because markets are quiet Asian session, and the DAX is not going anywhere this morning. So we'll wait and see what happens this afternoon with the US dollar rates. Rude oil. Rude oil. What's rude oil? Oil? Do you want to look at oil? I've already looked at oil. We're long on it from yesterday. From there. Well, I am anyway. So I'll be back this afternoon at 2:20 as usual for the US session. We'll obviously trade the opening ranges of the US indices. 1:30 this afternoon, we've got GDP for the US dollar, and we've got the unemployment claims figures, not the unemployment rate, but the unemployment claims, which gives us a clue as to what the unemployment rate will be. Yeah, we'll see what happens this afternoon at 1:30. The market is very lackluster this morning. There is a little bit of movement going on, but nothing particularly dramatic. So just watch these yen pairs today. What are you doing? Close. Yeah, watch these yen pairs today. There's a lot of volatility just gone in. That's pulled back as well, look. So big volatility spike on the yen. Let me just show you something quickly before I go. So going back to October when we had the previous intervention on the yen. I just want to show you what happened before the intervention because it's important. 22nd of September. See that candle? Yeah. This was a double-ended whipsaw that happened before the intervention. So if you see a very fast, sharp move hit the market, this is the Bank of Japan settling orders, basically getting the decks cleared, ready to drive the market, right? So before that happened, before the intervention happened, that move there was 191, right? Which is basically 2 ADR roughly. So we had a big whipsaw, and everyone was like, I was in the live room at that time, and I remember coming on to the live room and saying, what the hell happened in Asia? Not seen that before. And then in London, we were like, what was that? That was the first clue that something was coming. Look at the volatility. Hardly anything. Then we have a little bit of a wobble, a bigger wobble, a massive move, and then an intervention. So when you see things like that, you say to yourself, what was that? It's something, isn't it? So just be, that's not big enough. But also it's not in character, is it? Look at the 5-minute chart, what we've just experienced on the 5-minute chart. 10 minutes, there's been a huge yen long dump in the last 10 minutes of sort of a third of an ADR for no reason at all, really, at 10:30. You know, it's just at night, 8:30 a.m. It's just nothing, no reason for that to happen, is there? So anyway, just be aware. Yeah, if you see some huge, weird movement, it could be, just be ready, you know. Kurt, hello. I've started using the ORBA. I've noticed that I have not been having any TSL activate. As I can see, no modified message are appearing. I don't know what any of that means. Sorry. I'm using the A via VPS. As I can see, no modified messages are appearing. Oh, you're talking about trading stop loss, TSL. So I was trying to work out what you're talking about. TSL, trading stop loss. Okay. So basically just make sure you've got the trading stop loss turned on and make sure, it depends how you've got it set. You'd need to look at your set file. Go and make sure you read the manual, watch the video about the EA. But when you set your trading stop loss on, you can either trail as a percentage of the opening range. You can trail as a distance, depending on which of those you have set as positive. Obviously, if you set 1 to 0, it would use the distance. You have settings for trail when it's in profit by a specific amount. You can tighten the trailer when you reach a specific amount of profit. And the other thing you need to be aware of is that you can activate this either on bar close or on tick. So if you have that set to activate on bar close, if the market pushes up like 300 pips or 30 points or whatever, and then pulls back 30 points, your trailing stop will be calculated from the close of the candle, not from that high. If you have it on tick, every single tick, it will adjust your stop. So just best thing to do is put it in the back tester, go into visual mode in the back tester, set your trading stops up and watch what it does. See how it activates. And that will help you figure out where it's going wrong. If you're expecting it to trail and it's not, it's just you've got the settings different. And obviously make sure you've got a unique magic number on every single one of your trades. Of your instruments, rather. So DAX is just made a lower high, lower low, or is trying to make a lower high, lower low. I had this working yesterday, and I've done a lot of back testing. I'm unsure why it did not trail today. Don't know what your settings are, so it's impossible for me to tell you really. But that's how the settings all work. So just check that you've got it. Check the candle close thing, because when you're trouble with the back tester is when you're running something in the back tester, it moves so fast, it's quite hard to see what's going on unless you slow it down. And the trouble with the strategy tester in MT4 when you're looking in visual mode is you've got super fast, which is where the lever's to the right, and then one notch away from the right is like really quite slow. So it's either super fast where you can't see anything, or having to sit there for hours waiting for something to happen type thing. So it's not the best in the world. But so lower high, lower low, just gone in on the DAX. So potentially high, low, lower high, 50% retracement. Yeah, but if you start, come in the Telegram group, send your set file over and I'll have a look at it. But that's how the settings work. So right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. I'll be back this afternoon, 2:20. Back tomorrow morning, 7:50, same time for the DAX. And yeah, we'll see how we get on this afternoon with the US dollar. And yeah, good luck with everything. And fingers crossed we get some yen movement. That would be very, very nice, because that would undo pretty much everything that is in drawdown at the moment. All right, so have a good day. Anything you need, let me know. Otherwise, I will see you guys next time.